What's up, everybody? Thank you for tuning in to another episode of the CPA Zone, the podcast where we discuss tax strategies and accounting tips for entrepreneurs and real estate investors. My name is Ryan Pulis, and our company, the Pulis Group, offers tax planning and advisory services for entrepreneurs like you. Whether it's bookkeeping, tax planning, or CFO services that you're looking for, we've got you covered. What's up, everybody? Welcome to another episode of the CPA Zone. Today, we're going to talk about funding your kids' Roth IRAs. So one of the great things about being a business owner is you have the ability to create deductions that generally aren't available to others, such as W-2 employees. So there's really a lot you can do from a tax perspective when you own a business. Today, we're going to talk about one of those things being paying your kids through your business and then using the income from that to fund your kids' Roth IRAs. So one of the best places to save money is in a Roth IRA. Your earnings grow tax-free, and both your earnings and contributions come out tax-free in retirement. Now, one of the great things about owning a business is that you can hire your kids to do work in the business. You help them build skills that'll help them later in life when they go to seek a job elsewhere, or maybe they stay in your business and they run it themselves. Later on, they'll start building those skills early and learn really how the business works from the lowest level up. Now, there's a lot of bad information and advice on the internet when it comes to paying your kids. A lot of places just say you throw them on payroll and transfer money. You shift money out of your income tax bracket into theirs. But it's really easy to screw this up if you don't do it right. Some people pay their kids for things like modeling or other fake jobs, or basically they're doing their household chores just to try to get a business deduction. Don't do that. It's not going to hold up in an audit. Another way to screw this up is just paying your kids, making a one-time payment, maybe at the beginning or the end of the year, exactly equal to the standard deduction every year. Your kids, they need to perform tasks and do work that actually impacts your business if you want to pay them and take a valid business deduction. Now, it could be very basic office admin work. If they're young, maybe they're just cleaning up or shredding papers. But then you pay them accordingly for what they're actually doing. The standard deduction in 2024 is $14,600. If you have an 8 or 9 year old kid that's coming in and cleaning up the office every once in a while, maybe they take out the trash, shred some papers, probably not going to pay them $14,600. It has to be, the pay rate has to be reasonable for what the work they're actually doing. Okay. Another thing a lot of people miss is you should issue a W-2 at the end of the year to report their wages. So basically, in short, treat your kids just like any other employee. When you do that, you'll have a valid business deduction, and your kids are going to have income that's generally tax-free. That's, if they're earning less than the standard deduction, that $14,600 in 2024, they're not going to pay any income tax if they're earning that amount or less. At a minimum, say they're a little older and they're earning more than the standard deduction, most of their income, it's going to be that first $14,600 will be tax-free, and then they're going to pay taxes at 10% and then 12%, generally going to be lower than your tax rate. So you're able to shift income out of your tax bracket into your kids. And if you're paying your kids, if you operate as a sole proprietor or single member LLC, basically you're filing a Schedule C for your business. You can also do this with a husband-wife partnership. In those events, or in those cases, you don't pay any payroll taxes on the wages earned for kids under 18. So none of the Social Security or Medicare taxes, FICA, on kids under 18. Now, when kids are over 18, you have to pay those payroll taxes. Or if you're an S corporation or a C corporation, you're paying your kids there. Again, you're going to have the payroll taxes to deal with. You're not getting around that. There are strategies where you can have a family management company set up as a single member LLC, where your S corporation pays the family management company to work around it. But in any case, paying your kids is a great way to shift income into lower tax brackets. Now, into the meat of the discussion, what we want to talk about today, you use that earned income to fund a Roth IRA. Now, in order to contribute to a Roth IRA, you have to have earned income. So in this case, we're talking about your kids. They must have earned income. If you're paying them to work in your business, congratulations, they have earned income. The W-2 wages that you pay them are considered earned income, so they can contribute the lesser of the amount you pay them for the year or $7,000, which is the Roth IRA contribution limit for 2024. Let's say hypothetically you pay your child $10,000 for work they performed in your business this summer. They can contribute $7,000 and max out the Roth IRA. Or maybe you're very generous, you let them keep their earnings and spend it. You can make a gift to contribute the $7,000 to the Roth IRA. You gift it to them. You can make a gift to anyone, any year, up to $18,000 without triggering a gift tax return. We have clients that what they'll do is their kids are earning income, and whatever they contribute to the Roth, the parents will match as a gift. Now, you can't just gift to make a Roth IRA deduction. They have to have that earned income, but they don't have to necessarily use the money that was earned to fund the IRA. If you want to kick in and treat it as a gift, fund it for them, help that money start growing early and tax-free, and it really compounds over time. Now, whatever approach you take, your kids are going to get a good early start on saving for retirement, and they're doing it through one of the best or the most tax-efficient savings vehicle available to them, which is the Roth IRA. Now, a Roth IRA, technically a retirement account, but remember, you can withdraw contributions, tax and penalty free, so it could technically be used as a savings vehicle for things like college or buying their first home. And then the rest stays in there. They keep the earnings in there growing until retirement when they withdraw the earnings. This is also a great opportunity to start teaching your kids about investing. Maybe you open a more straightforward Roth through a Fidelity or Vanguard and teach them about stocks and bonds, your more traditional investments. Or perhaps you have them self-direct their IRA. You can get them involved in alternative investments such as real estate, crypto, whatever it is, or whatever you like, they can invest in pretty much if it's self-directed. So it's a wonderful learning opportunity for their kids. Plus, you get the quality time to spend with them while teaching them important life skills. So just to summarize, so you can pay your kids through your business, shift income into their lower tax brackets, often eliminate tax altogether when they're under the standard deduction. If you're a single member LLC or a sole proprietor or a husband-wife partnership, you can even avoid the payroll taxes until they turn 18. Then you use the earned income from paying your kids through your business to fund a Roth IRA, and you let those earnings grow tax-free until retirement. Plus, you get to teach your kids important life skills like working, learning about your business, learning how to invest their money. It's really a win-win situation. So that about does it for today. I hope you found value in this episode. If so, please leave a 5-star review or hit the like and subscribe button. Until next time, have a great day. So that about does it for this episode of the CPA Zone. Thanks for listening, and I hope you found something valuable that you can take away. We are taking on new clients, and if you'd like to work with us, then go to our website and fill out the client intake form on our contact page. This can be found at thepulisgroup.com/contact. That's ThePulicegroup.com/contact.